Hello and welcome to ActivTrades biggest market movers. Today I'll be looking at the US dollar against the Singapore dollar. I'll be having a quick recap on this currency since we last looked at it, and I'll also be trying to identify the key technical levels as we head into the all-important non-farm payrolls tomorrow. So at the last time we had a look at this pair, we were at a very critical level at around the 135.50 I believe, and we moved up towards the 136 and we fell off sharply. Much like a lot of US dollar pairs, we were unable to make higher highs as we were really moving up against the former highs on this pair around the 136.50. We failed around the 136.20 and we've fallen down to 135.50. This week we've had a very weak retrace and we're currently sitting at around 134.15. As we head towards the all-important job report, I think it'll be a good idea to try to identify the key technical levels, and we can really try to break down where this currency may be heading. So I think really the most obvious thing that we can see in this currency pair is that a very large head and shoulders pattern is starting to emerge in this currency, and obviously as we see the US dollar starting to weaken over the last couple of days, albeit we have had a little bit of retrace, we can see that it's quite an ominous sign for the US dollar overall, that this pair is now sitting in a very strong head and shoulders pattern. And if we were to break the 131.50 area, you can see that there's really almost a chance of a 1300 pip head and shoulders playing out, which is obviously an ominous sign for the US dollar. And we have, much like when these patterns do play out, we have smaller patterns emerging inside the larger pattern. So that could be an area of resistance that the market might like to reverse this retrace and move down and test the 133.50 area to see if that does break. Moving towards the upside again, the next and really the last line of resistance on this pair will be 135.80, which is also coinciding with the 100-day average, or just slightly above it, but that's another very important resistance level. And I think those are the areas that traders will potentially look to target to the downside. And obviously if we look at crucial support, we can really see this smaller head and shoulders. The last line of defense is around 133.50. If we do break that, then obviously we can have a sharp move down to the 131.50, and then you can see the emergence of a much larger head and shoulders pattern. And if we do break that, then we can really see the US dollar start to come off. So I think all eyes on this currency pair, because it really is a leading indicator of what could potentially be a very weak US dollar. Thank you very much. This has been ActivTrades biggest market movers.